Hello everyone, Kaseem here. Welcome to the channel. If you're new to the channel, you are welcome. If you're not new to the channel, you are welcome back. As always, I appreciate you for coming back. You are the real MVP. Thank you for coming back. Thank you for coming back to check out what I have to say. In today's video, I'm going to try to completely break down the options section of the Robinhood app. That seems to be confusing a lot of my friends and family, and I want to break that down for them. So thanks for the person that requested this video. You know yourself. Thank you. Created the opportunity for me to do this content. Appreciate you. So I'm going to break down the option section of Robinhood, what everything is. I'm going to break that down for you today. And at the same time, we are going to do a quick calculation of my most recent option trade. Basically, what I do to make money in the stock market. We're gonna do a quick breakdown of it in today's video. So let's get right into today's video. Today's video is gonna be a little bit different. As you guys can see, I'm not in my studio today. I'm out of town. So when you're out of town, the work still continues. The information still needs to keep on flowing. So I hope you guys like the temporary void that I have here. So we are going to pop into the Robinhood app really quickly. I'm just going to be talking in the background of the video. Just give me a second here. Let's pop into the Robinhood app. Like I said earlier on, today's video is going to be a little bit different. And what we're going to do today is I'm going to walk you guys through the Robinhood app. I'm going to use both on the screen selection, and at the same time I'm going to be pointing at it directly from my phone. So I currently have these 3 trades open right now. I have Jumia, I have Blink Charging, and I have SPY. Like I pretty much say, like I've been saying in the past couple of videos, we are going to have SPY here for a long time, because this is just me betting on America. The SPY trade, we're gonna have this pretty much for a long time, and we'll see how the trade goes over time. It's just pretty much still in a range, but with that one, I'm betting that the US stock market will be going up in the future. All right, so let's take a look at what I want to show you guys today, which is, let's take a look at, use a different stock. Let's use Jumia today, right? We're gonna use Jumia because I want to explain to you guys how to use this section of the Robinhood app right here. This section, the part that shows options. I'm gonna show you guys how to use that and what that means. So if you take a look at the very top, at the top of the screen, or the very top here that has the dates, right? What those are, these dates right here, those are basically the exact dates that the option contract will expire. The exact dates that the option contract will expire. Those are what these are. These are basically the dates that each and every single one of these option contracts will expire. And different stocks have different expiration dates, and it goes as far out as a couple of years. With Jumia here, we have until January 20th, 2023. That's how far back you can bet up or down on a stock. With Jumia, like I said, we have as far out as January 20th, 2023. So with Jumia here, as you guys can see, let's take a look at the second thing, which is going to be this section right here. The one that says buy, still keep an eye on the screen, is the top section. The one that says buy and sell right here. One that says buy and sell. So the buy button, what this buy button means is you are basically buying the contract. Okay? You're buying the option contract. And what option contracts are is pieces of shares that are bundled into one. Okay, So pieces of shares that are bundled into one is called an option contract. And with every single contract, there is 100 shares in every single contract. Both the buy and the sell has 100 contracts. Now with buy, you are buying the contract. That's what buy basically means when you trade in options. You're literally buying the contract. That means you're saying that I'm willing to buy the option to buy the stock at a certain price. Okay. And when you go to um sell, you're doing I'm willing to buy or sell. So with the buy button at the very top here, the buy button basically just says that you are buying the contract. All right. So let's take a look at the um the sell button here, right? This is the section that I use for the real strategy. The real strategy. This is a section because essentially what you're doing with the sell button at the very top here, what you're doing with the sell button is that you are basically creating the contract that other people is buying. You're creating a contract that other people are buying from you. All right. That is what you're doing when you go to sell. Okay. You basically creating a contract. Now, if we take a look at this at the very bottom in the middle here, in the middle that you see share price, which is right here in the middle, that you see share price, that is the current stock price. That is the current stock price of that stock at the moment. The current stock price of Jumia is $26.11. That is the current stock price for Jumia. All right. So what the next thing that I'm going to show you is this one that says 27 puts. 27 puts. Basically, what that means is that you are willing to buy the shares at $27. If the shares goes down to 27, you're willing to buy it. Okay? And keep an eye on the very top here, the buy and sell section. This is when you have when you're trying to do the real strategy, that's when you go to sell. Now, when you have the buy, when you're on the buy section, it basically means pretty much the same thing, but the buy section basically is either going to expire worthless and you lose the money that you pay for it, or is going to expire in the money and you keep the profit that you make. Okay. I know options can be a little bit confusing, but I'm trying my best to make content to really break everything down, make it user really give present the information in such a user friendly way. All right. So if you take a look at the $27 puts right here, so I clicked on it and it popped up. If you look at the very top, right here, at the very top, we are saying buy Jumia $27 puts. All right. And if we see, it says limit price is $1 $1.74, and the max cost is going to be $174. So with this contract right here, this total contract right here, what we're basically saying here is that I am willing to buy the contract, but not the obligation. Okay, I'm willing to purchase the contract, but not the actual obligation to buy the stock. I don't have to buy the stock, right? That's the difference between when you're buying options. You don't have to buy the stock, and you don't have to sell the stock. All right. The contract just expires worthless if the stock is below the price. But if it's above the price, you get to make money in the difference of the contract. But the major thing that you need to keep an eye on is just the buy section here. Is it gives you the right but not the obligation to execute the contract. So if I'm basically saying that, okay, I'm going to buy a house, I'm going to leave a deposit, right? That is what this section is. That this buy section, that's what it means. I'm going to buy a house, but I'm going to give you a deposit, right? I have two things that can happen when it comes to the end of the contract and I need to buy the house. Is either I buy the house or I lose the contract. I lose the deposit. That is what the buying section is. Is either you buy the house or you lose the deposit. And the second section here is that you have to buy the house if the contract, the agreement, if everything goes according to plan 100%, you have to buy the house or you have to sell the house. All right. If you're trying to buy or sell a house, let's say you know you're in contract with a real estate agent and you want to buy a house, this sell option section here, you have to sell the house or you have to buy the house. That is what that is. But the buy section here, it means that you don't have to buy the house and you don't have to sell the house. But one way or the other, you're probably going to lose your deposit. The only way you're not going to lose your deposit, if let's say you have a contract that is a week out and within the week the contract is more valuable than what you paid for it. So let's say you paid $200 for the contract, like this very top one right here. You see where it says max cost? So this very top one right here, where it says max cost, that is how much it's going to cost you to be able to take control of 100 shares of Jumia. It's going to cost you $174 to take control of Jumia shares. Now, because we're doing buy option at the very top right here, at the very top, because we're doing buy options, what that means, like I said earlier on, you have the right to buy the stock, but you don't have the obligation to buy it. You don't have the obligation. But with the sell section, when you go to sell option, you have the obligation. I think that's the biggest. That's the two biggest things that I can take out of this video. That you can take out of this video. When you are buying options, you have the right to buy the underlying stock, but not the obligation, right? This section here, when you're buying options, any of this is when you're buying option. Any of these ones that says $28, $27. The key point is you have the right to buy the stock, but not the obligation. And with the sell section here, with that one, you have the obligation to buy or sell the stock, right? So one of them with buy, you have the right to buy the stock, but you don't have the obligation to buy the stock. With this one, you have the right to buy the stock or you have the right to sell the stock. Okay? That is what these two buttons are. Okay? These two buttons right here, one of them gives you the right to buy but not the obligation, and the next one, which is sell, gives you the right to sell but with the obligation. If the contract hits by the end of the week, which is usually on Friday. Let's say, for example, if you want to do sell puts, let me give you an example of the one that I have right here. The one that says $25 puts -2. All right. I currently have that right now. That is the stock. I currently have those. And this is, if you look at the option price right now, this is what's going on. Right. Let me explain this to you. Exactly what's going on with these options right here. Let me explain it to you. So what is going on right here is that I'm saying that I'm willing, you see this options right here, Jumia $25 puts, and it shows point 74 cents. So basically what that is saying is that I'm willing to buy Jumia stock if the stock goes down to $25. If the stock goes down to $25, if Jumia stock right here at the very top, if it goes down to $25 at any given time, I'm willing to buy the stock. Okay. And for doing that, I get paid. If I scroll all the way down here, if you guys see, if you see on top here, it says Jumia $25 puts, 5/21, and you can see plus 100. You can see plus $174. Okay, so what that basically means is that I got paid $174 to open these two contracts. Okay, which those two contracts, this is the two contracts right here, I had to put up, so I had to leave a deposit of $5,000, right, in order for me to get paid $174. All right, so by leaving the deposit, you get paid. Now what this contract essentially means is that if by Friday, which that will be the end of this contract, if by Friday the stock, Jumia stock is, if it's above $25, I get to keep, all right, right here, I get to keep this 100 at the bottom right here. Look at total at the bottom. I get to keep that money. I get to keep $174 as my profit, as long as Jumia stock does not get below $25 by Friday. Okay, so now let's go back into the option chain. Okay, and we do that by opening the stock, as you guys just see me do. We open the stock, go to trade, go to trade options. When you do that, it pops this open right here, and all you just need to do at the very top, you select the date, which is May 21st. That's when the contract will expire. All right, and then the next thing that you need to do is go on to the very top here and then select sell, because what you're doing is when you're doing options, when you're trying to buy and sell, it's the opposite. Okay, so you go to sell options and you go to sell puts. Okay, it's reverse when you're doing options. Okay, when you go to sell puts, you're essentially saying that I'm willing to buy, and then when you go to sell call, is that you're willing to sell. I know it's the opposite of what traders are used to, which buy call, meaning you're betting the stock will go up. If you go buy puts, it means you're saying that the stock will go down. All right, but right now, if we're talking about the real strategy, we are going to be talking about sell call or sell put. So the contract, in order for me to get paid that $174, I had to go to sell put. All right, and with sell put, what I did was, I'm like, okay, the current stock price is 26.11. It's currently at $26.11, and I'm saying that I'm willing to buy 200 shares. All right, by clicking on that, that's what that means. I'm willing to buy 200 shares. All right, and by saying I'm willing to buy 200 shares and I have two contracts at that time, at the time that I opened this contract, the total credits that I got paid, when you say minimum credit, the total credit that I got paid was $174, of which I just showed you guys earlier on. So now the current value of that same stock, of that same option, if I was to do it again, I'm gonna get a credit of 148, which is obviously less. So that's where this profit comes from. When you go and see plus $26, that's where the profit comes from. The thing with options is that the main thing with option is that as time goes by, the value of the option goes down. So let's say on Monday, if you open an option contract, by Friday, what can happen is either the price that you're trying to buy the stock at can hit the options, can hit the price, the option gets the stock price, get to the options, and then you buy the stock, or it don't get to it, and then you get to keep the profit. Okay, if you don't get to it, we get to keep this profit, this 100 right here, this 174 at the bottom, $174. You get to keep that profit right there. All right, so that is pretty much it with doing this option contract. All right, I think that's as much as I can fit into this video currently. I don't want to make it too long. So in conclusion, what I'm gonna do now is I'm gonna walk you through the whole process again. So let's say, today's Monday. I want to buy an option contract. I'm gonna make it real nice and short. I want to buy an option contract and I want to get paid for doing that. So all I have to do is obviously first you want to make sure you have a little bit of money in the buying power. All right, that is where you get money to buy options or sell options. All right, so let's go to Jumia. And then we go to trade options. This comes up. Then the first thing you need to do is at the very top here, you can click on the dates. All right, because you need to check the dates that your options will expire. Usually I trade the weekly options. I trade the weeklies. It's easier for me to get in and out of those weeklies and make some money. Sometimes I trade it once, sometimes I trade it twice. But it's easier to trade between them. So the next thing that you need to do now is to look around. All right, look around. So let's zoom in on this ones right here. The one that says 25 puts minus 2. All right. I'm going to go to sell puts because that's what I'm currently doing. So 25 puts minus 2, the $25 one. Let's zoom in at that. So the $25 puts, what that essentially means is that I'm willing to buy Jumia stock if the stock price drops to $25. All right, I'm willing to buy the stock. For me to open this contract, what's gonna happen is, you see the one that says $74, 0.74. What that basically means is each contract is 100 shares, and currently each shares is currently selling. Well, the contract for the shares is currently selling at 74 cents per share. And remember, there's 100 shares in one contract. Okay, there's 100 shares in one contract. So if I click on this 25, that is 100 shares. That's one contract. All right. So that is what that box, that's $0.74. That's what that means. That's what that box means. Okay. So the second part here that says chance of profit is just what Robinhood put out there, is their mathematical calculation based off of what they know about options and how option works. They use that to give an estimate of what the chance of that contract being in profit. Of course, it's not necessarily true that that contract will be in profit. Sometimes, markets can change and that contract does not get to be in profit, if you get what I'm saying. And if you go all the way down at the bottom, they leave a disclaimer, they leave a disclosure right there, and they tell you that it's just an estimate, okay, um based on that particular model that they have going on, okay. So it's not 100%, it's just an estimate. All right, I explained what that box to the right hand side, the dollar 0.47, that basically means you're paying 74 cents for every single contract, which if I click on this and I click on one, I want one contract which has 100 shares in it. If you see right there, it says sell Jumia 25 puts, okay, and it says X 100 shares. So one contract has 100 shares. So at the bottom of that, you see limit price, and you see the range bid and ask. Bid and ask just means the range. You can get the stock within $71 and $77. So you can put your price anywhere in between, and hopefully you get the price that you want. If you put 70 if you put 0.71 cents, the likelihood of you getting the stock is very slim. And if you put 77, you're most likely to get the stock pretty much right away. Right here that says 77, you're pretty much most likely to get a stock, to get the options right away. So at the bottom, you're gonna see minimum credit. Minimum credit just simply means the total amount of money that you're gonna get paid for opening up, for doing that sell puts. All right, sell puts. You get paid um $74 if you have one contract. All right. So at the bottom of it, you see $1,555 available. That is the amount of money that I have available in order for me to do this contract. So we're having 1,500. I cannot do the contract because the contract is going for 2,500, and I know that by looking at the price of the option is $25. So $25 times 100 is 2,500. So I don't have enough money to do this contract. And then at the bottom as well, if you see max profit, break even, max loss, that just gives you an estimate. Robinhood just started doing that. That gives you an estimate of where you're most likely, where the price is right now, and what is most likely to happen with that particular option contract. So max profit means you're gonna get paid. That's all the amount of money you're gonna make. $74 for one contract. And break even is 24.26. Break even is 24.26. And that just means that, okay, when the stock price hit that middle, you're gonna be even. And max loss is 2,400 $426. The max loss part, what that means is that, let's say you buy at the end of the contract, you get the stock. Okay, because remember, the whole point of this contract is to buy stocks at a discount, at a cheaper price. And you wait. You get paid for waiting to buy the stock. If the price gets to it, you get to buy the stock. If the price don't get to it, you don't get the stock. Okay, so the max loss section there, what that is essentially saying is that there is the amount of money that you can lose is $2,426, and in order for that to happen, first of all, you will need to have the stock at the end of the contract. You need to have the stock, and then the stock Jumia, it needs to go to zero for you to lose all that money. For you to get to the max loss section, Jumia would have to go to zero. If you're following along, I hope you guys are following along. Max loss, Jumia will have to go to zero for you to basically be to lose all your money, which I don't think the company is gonna go to zero anytime soon. It looks like the lowest that we've been in the recent month is $23, and that seems to be the lowest we've been in a long time, in a year or so. So in a year, the stock has actually doubled. So you never know. The lowest that we've been was like $8-9, which is earlier last year. That was earlier in September last year. So we'll see where the stock will go over time. I know that was a little bit of a long video, all right? I know that's long, but what I'm trying to do with this particular video is to break everything down. Break what is break down, what options are at the lamest term that I know how to explain. If you have any questions, put it in the description below. I will get to your questions. And if the question is significant enough, I'll do a video on it and I'll reference the person that answered the person that asked the question, and hopefully that would answer your question. So thank you for watching. I appreciate you for watching. Thank you for sticking around up to this point. Appreciate you for sticking around, and hopefully you like my new set. Just I don't have all my tech gears right now to make my video the best, but mind with me. I'm on vacation, and I wanna keep the video coming because work don't stop even when I'm on vacation. It continues. All right. So thank you again for watching. I appreciate you. Hope you've learned something. And if you haven't, leave it in the description. I will answer your question like I always do and say all the time. I love interacting with you guys. Thank you again for watching. Appreciate you. Until next time. See you later. Love you all.